morning, good afternoon, good evening. Welcome to this week's market review, where we look at the previous week and see the opportunities that we had on the market. Okay, so I'm going to look at the opportunities that presented themselves last week using the harmonic maze strategy, Okay, so we have a set of rules that we follow, and I want to show you how you can benefit on this famous indicator called the harmonic. A lot of people know that there is an indicator called the harmonic, but they don't really know how to use it, and they usually mess up things. But let me show you how this same harmonic, when you apply it to our method, you can find good setups. This is just last week. It's not last year or any other year. Last week, we had a lot of setups, a good number of them. And we caught some of those setups, and we made quite some money trading those setups. Okay, so I'm going to go directly on the setups that worked. Okay, so as usual, I follow a maximum of 13 pairs. I follow a maximum of 13 pairs. I don't care what happens in those pairs that I follow. For as long as my pairs, they have given me something, I don't care what the other pairs I don't follow will present. Okay, so let's begin our session. Okay, so we are going to start with the Euro USD or GBP USD, sorry. So this is the chart of the GBP USD. You can see here. The harmonics, we are going to be viewing them on the 4-hour time frame. So we are going to see if there is a 4-hour harmonic, then we drop to the 1 hour to see if there is a pattern that is going to tell us to either buy or sell the market. Okay, so we are going to be dropping from 4-hour, we go to the 1 hour to see if there is a pattern there. If the pattern is not clear in 1 hour, we drop again, we go to the 15 minutes time frame. If there's nothing, then there's nothing. So we like trading with rules. Okay, we have a set of rules we follow. If those rules are not met, we don't take a trade. If they are met, we take a trade. No wonder we only take those trades that are highly probable. Okay, so this is the 4 harmonic, the H4 chart for GBP USD, the cable. Okay, as you can see last week, so these lines here, if you are on the 4-hour time frame, from this line here to this line, it represents 1 whole week. Okay, it represents 1 whole week. Okay, so last week was this trade here, or this price action that is here. So this was last week. So last week on GBP USD, we had 2 harmonics that fired. We had this one, which is a past harmonic, and we had also this one, which is still active in the 4 hours phase. Okay, so let us look at what happened at those specific points where that harmonic fired. Okay, so the first step is we drop to the 1 hour time frame. Okay, so the first harmonic fired on Tuesday. Okay, so this was the point where the harmonic fired. We are looking for a pattern in 1 hour. Okay, so you look to the left. Okay, they pushed the market in 3 phases, 1, 2, 3. Okay, they closed below the catch up, then they went again to retest the high, then they dropped aggressively here. So there was no proper entry on that harmonic that was presented to us on Tuesday. There was no proper harmonic on the 1 hour. Okay, so looking at the next one again that was presented, it was presented on Thursday. So here on Friday, sorry. So again, the harmonic fired. This is the one that is active in the forward time frame. Okay, so they closed above the red line, that is our 13 EMA. They closed above the 13 EMA, then they closed below the 13 EMA, then they closed the above again. Okay, so by the time they were closing above the 13 EMA, this was too late for me to take any trade. and it was a Friday going into a weekend. So I usually don't carry my trades to the following weekend. So this one, yes, it was a confirmed W, and TDI also confirmed, okay, out of the band, you can see. So we strictly follow the rules out of the band TDI, and it went in the band, and it gave you a baseline bounce there. It gave you a baseline bounce. So the trade was going up, but it was the weekend. It was Friday going into the weekend, so it did nothing. It just went there. So okay, so we have seen that the 1 hour there was nothing that was presented. So we dropped to the 15 minutes time frame and check those specific points to see again if there is something that was presented. Okay, so the first one again on Tuesday, again, this is the 15 minutes time frame. You can see the market here, it was in consolidation, then it dropped below the 13 EMA. Again, it went up the 13 EMA. So what are you waiting for? You're waiting for price to drop again below the 13 EMA. The price nicely dropped, but this was a big candle. It was a news candle, this one. So there was no entry that was given to you there on Tuesday. Okay, so going to the next harmonic that fired on Friday, we see if there is a pattern. This is the 15 minutes time frame. Okay, so the good part with this is that when a harmonic has fired, there's even a box down which tells you where to look for your setup. So if your setup has not occurred within that box, then that is and the harmonic has expired, you start looking for other harmonics. Okay, you start looking for other harmonics. Okay, so you must train yourself to get to be getting at least 30 to 50 pips out of the market. I usually get just 40 pips, and I look for other trades. If I'm day trading, I just get, if a particular trade I get 40 pips, that's all. I look for another setup again, I get 40 pips, that's all. Okay, so on Friday they gave us a good setup here. Okay, so price came aggressively down, okay, creating the low of the day, okay, and it was confirmed, it was locked by this swing point here, the swing low, okay. Then price went up, okay, so it closed above the 13 EMA. After closing above the 13 EMA, price went down, okay, exactly what we want to see. And then the first leg here, you can see TTI, it popped out of the band. Then the second leg in the band like that, okay. So that was our interest point there. So our entry is the moment they close above the 13 EMA again, okay. So the moment they close above the 13 EMA, there you enter. Then your target profit is 40 pips. You target 40 pips going there. Okay, 40 pips was made there, and this trade went up to 54 pips. Okay, so where is your protective stop going to be? Remember, I only put a protective stop and I manage my trade using the 13 EMA. Okay, so that protective stop that I put, it doesn't mean my trade has to hit the protective stop for me to know that the trade is invalid. I use the 13 EMA to check and see if my trade is invalid and all that. Okay, so for you to find more information on those concepts, you can just go back to the videos that I released and you'll find those concepts. Okay, so as you can see, this moved 54 pips. So now where is my protective stop going to be? So my protective stop is going to be 5 pips below the previous swing point. Okay, so there is this swing point here that was made by price and it was confirmed by this Cosmos which is here. So 5 pips below this, that is where my protective stop is going to be. So that stop is just to protect me from unforeseen events that have not taken into account. It can be a sudden news release and all those things. So it's just to protect me from those. So the entry there, 5 pips below there, the protective stop was somewhere 23 pips to get 40 pips up there. Okay, so you can see this was a trade would have easily caught using the harmonic on Friday on GBP USD. on the GBP USD. Okay, so moving on, we move on to another one which presented, which is the USD JPY. USD JPY. Okay, as you can see on top here, there was this harmonic, nice harmonic, which was presented here. Okay, again, this is the 4-hour time frame, 4-hour harmonic, 1-hour pattern, and 15-minute pattern. Okay, and the box painted nicely there, saying that you should look at these points for your pattern. Okay, so what do? You drop to the 1 hour and check if there is a pattern there. Okay, so here that is the same point, 1 hour. As you can see, there's no point, there's no pattern. So what are we looking for? We are looking for any reversal pattern that is going to tell us that, okay, this price is ready to go down, this price is ready to go down. Okay, some people, what they do is that whenever the harmonic fires, they, without having any reversal pattern, they just enter. But usually these harmonics, they extend before they are truly confirmed that the price is reversing. So the best way you can do is use price action to trade these harmonics. Okay, so there was no pattern really there that was confirmed, that was signifying an entry for us. Okay, and remember, this pair is the USD JPY. Okay, so it is paired with USD is paired with a currency that is active in Asia. So expect movements in Asia because JPY, Japanese yen, is active in Asia. So the pattern will actually be in Asia. Sometimes they can be in London because the USD is active, and the US dollar currently is the reserve currency of the world. Okay, so you drop to the 15 minutes time frame on the same spot there. Okay, so let me just expand it so that you see clearly on that same point. Okay, so the high of the day was locked there by that swing high. Okay, price moved below the 13 EMA. So what are you waiting for? You're waiting for price to pop up above the 13 EMA. Then once it grows below, that is your confirmed M pattern. That is your confirmed M pattern. Again, you need to look at TDI. TDI here, you can see out of the band there, the first leg, you can see the first leg, the high of the day, it was out of the band. Then the second leg there in the band. Okay, if it came close to the market baseline, we would have said it has even combined with the the market baseline bounce, okay, which we call the baseline bounce. Okay, so your entry there is this point here. Your entry is this point. Again, you target 40 pips. From there, price dance until 40 pips was hit there. Okay, so this one actually dropped massively. It actually dropped about 160 pips, about 160 pips. Okay, so again, there is a way of capitalizing such moves if you just trail the 13 EMA. We talk about those things again. If you go back to the videos, you will find those things. Okay, so where is my stop going to be? Again, it is going to be above the previous swing point, and that is a swing point, 5 pips above there. So the swing point is at 31 pips. So 5 pips to 86 pips there. So that is just a protective stop. The moment price shows me something that I don't like, I exit the trade. Okay, so that was another trade you'd have gotten on USD JPY last week. This was a Wednesday. Okay, the previous one I've seen was on Friday. So on Wednesday, you'd have caught something. Okay, so we go to the next one that presented. Again, the harmonic that presented is AUD JPY. So AUD JPY, as you can see, there was a harmonic here. Okay, and it gave a very big box there, signifying that look within that box for a pattern. Okay, so what you do, you go to the 1 hour time frame to see if there is a pattern. Okay, so this was a beautiful trade because this one actually, you can turn it into a swing trade. You can turn it into a swing trade. Okay, depending on the pattern that they are going to present to you. Okay, so there are specific things that I look at for me to turn a trade into a swing trade. Okay, so we are at this point of time. That's where the harmonic fired, showing that price is about to reverse and go down. So if you look at the previous day, price went up, showing you the first leg again there, and TDI was just slightly out of the band there down. Okay, price went up. It never crossed below the red line there. Then it went up to give you another leg there. Then it went down to close below the 10 EMA. Then it went up again. So it moved up 3 times. Okay, so this is another variation of the head and shoulder pattern. Okay, we'll talk about these patterns when we in the coming videos, but you just know that this is another variation of head and shoulder pattern. Okay, so you enter on the third leg, you enter your price on the third leg, and what is nice about this trade is that when the third leg gives you a baseline bounce, the TDI is bouncing, the RSI line is bouncing on the on the baseline. That one, I even close my eyes when taking such trades because I know that okay, there will be massive drops. This one, it will drop massively. Okay, so whenever I'm swinging again, there is a specific target that I target. I target 150 pips. Okay, I target 150 pips, and as usual, the stop is going to be above the previous swing point. Okay, so the previous swing point is that one, and you can see they took out the stops in both directions. They went up, took out the stops, went down, took out the stops, and they dropped. So it's going to be above that point, above 5 pips above, just 5 pips above that point for me to get the 140. And the 140 pips was made somewhere there, was made somewhere there. So this one, I actually took it on Tuesday and exited it on it Wednesday. It was my swing trade for the day because of all the confluences that I've seen here. Okay, so we'll talk about these things in details in the coming videos. Okay, so let's go down to the 15 minutes time frame to see if there was a pattern there. Okay, so that particular point was where the harmonic fired was here on Tuesday. Okay, so if you look at the 15 minutes time frame, there's really no pattern to show you that okay, this price is going down. Okay, so on the 15 minutes time frame, things were not clear enough for us to take that pattern. Okay, on Wednesday again, there was nothing clear. They didn't give us anything clear. On Thursday again, nothing was clear. Friday, they gave us something which was clear. Okay, so this is where the box is ending, and it is telling you that that is where you need to stop to look for patterns. Okay, so Friday they gave you the last the pattern. Okay, they made a high again there, which was locked. TDI out of the band. They came, they closed below the 13, then they closed above the 13, then they went again and they crossed below the 13 here. So that was where you were going to be looking for an entry there. You target 40 pips, and your 40 pips was made somewhere there, and this one dropped actually to somewhere 60 pips. Okay, somewhere to 60 pips. Okay, so don't complicate things. What you need to do is just anticipate. Don't be reactive in the market. Always chasing price. You need to relax and know what you're expecting in the market. If you know what you're expecting in the market, it will be easy for you to control your emotions, because no matter how many times they're going to show you, okay, this price is going down, this price is going up, for as long as your rules have not been met, you're not going to be tempted to enter that trade. Okay, so make it simple and realize that there is always an opportunity in the market to either buy or sell. Okay, for you, if you make rules, it cannot occur in that particular week, but that doesn't mean that the coming week you are going to have nothing again. You have opportunities. What is important is at the end of a week, at the end of a month is that you need to make money. You need to be positive at the end of the day. Even if you take one losing trade, what is important is at the end of the day, you need to be positive and you need to be in profit. Okay, so let's look at again another one which presented itself. Okay, the euro card. Okay, so this is the euro card one, and it has an active harmonic. You can see there it has an active harmonic. It has an active harmonic. Okay, just push this to the side so that you see nicely. Okay, okay. So you can see that it has an active harmonic and there's a box that has painted there. That there was an harmonic there and price dropped nicely, and there is an harmonic here indicating that there is a possibility of this pricing dropping like that. Okay, so we go again to the 1 hour time frame to see if there is a pattern that he presented. Okay, so Monday, remember this is Monday, Tuesday, Wednesday, Thursday, Friday, like that. Monday here there was a harmonic, but nothing presented for us to sell this market down. There was no pattern there. So if there's no pattern, just leave and wait for a pattern. Okay. Thursday here you can see there was a harmonic, but there was no pattern there to really sell this market, and they continued moving up. Okay, so we drop to the 15 minutes time frame to see if they gave us something on those same points, on those same specific points that we are talking about. Okay, so Monday, on those same points, you have this. Okay, you can even see there is a nice box that has been painted there, telling you that you need to look within that box for your pattern. Okay, so Monday you have this. So the first thing they showed you is this. This is an advanced M whereby they do not cross below the 13 EMA. Okay, so but I do not advise for now for you to take these advanced M's, because you'll be taking a lot of scratches. Wait for them to cross below the 13 and they come back again above the 13. Then that's when you enter a trade. Okay, so they moved from that high, so that was the high of the day. Okay, the high of the day, they came down, they crossed the 13 there, crossed below the 13. Okay, and created a swing point there. Again they went above the 13, then they went below the 13 moving average. So your entry was going to be there. Again, your stop is going to be 5 pips above this swing point here that is there. Okay, so 5 pips above that swing point there. Okay, 5 pips, so it will be 25 pips. Then you are targeting 40 pips. You are targeting 40 pips. They moved, the maximum they moved was 60 pips. Okay, but 40 pips would have been made there. Nice and clean. Nice and clean. Okay, this is what we mean when we say we make things simple. We make things simple. Okay, so if you want this indicator or the template that we use, just get in touch with us. We are going to provide everything free of charge. We're going to provide everything free of charge and tell you how to use them. Okay, so Thursday, again, you can see price was just moving up, up, up. There was no pattern that could have made you to take any trade. Okay, according to our rules. Okay, so this is now the active one, and the box has printed. So Monday I'll be expecting a certain pattern to present and take the trade nicely without the fear or anything like that. Okay, so we go to another one which presented, which is GBP-AUD. Okay, GBP-AUD, you can see this is the 4 hours again. 4-hour harmonic, 1 hour pattern, 15 minutes pattern. That is the rule. Okay, you can see this big harmonic that presented. Okay, telling you there that this price is going where? It's going down, and there's a box that painted there telling you that you need to look within that box for your pattern. You need to look within that box for your pattern. Okay, so you drop to the 1 hour 1 hour time frame. 1 hour time frame, that is the area there. Okay, as you can see, there is really nothing that presented there to take this trade down here. Take this trade down here. Okay, there's really nothing that presented itself. So you drop to the 15 minutes time frame. On that same point, you check if there is a pattern that would have made you to take that trade. Okay, so that is the same point there. Okay, so now Here they showed you something that we call a half Batman. Okay, something that is called the half Batman and the type 2 half Batman. Okay, it would have been difficult for you to spot this because it is usually difficult to spot it. Okay, so they came, they crossed below, and they did not go above. They just trapped on the 13 EMA and they dropped. Okay, so if you spotted this, your entry would have been there, just there. Okay, but this one, if it is not clear enough for you, don't take the trade. There will always be a clear trade to take for you. There will always be a clear trade to take for you. Okay, so the last harmonic that presented last week is the GBP JPY. Okay, the GBP JPY. As you can see, there was this harmonic here telling you that you need to buy there. You need to buy. Okay, so what do you do again? You go to the 1 hour time frame. Okay, 1 hour time frame. That is the exact point it presented. And in 1 hour, there is an advanced W. There is an advanced W. Why is it advanced? Because they didn't close above the 13 EMA, above the 13 EMA. And TDI out of the band there, they came in the band there. Remember, this is a Friday again, so the moment they were trying to close, they didn't even close above the 13 EMA. So in 1 hour, there was even no entry here. There was no entry to take this trade up. So 15 minutes, let's see if they gave us something. Okay, 15 minutes, they gave us this. Okay, and the box, you can clearly see the box is telling you look within that same area for the setup. Okay, let me just expand it so that you see nicely. Okay, so this, you cannot miss this. When it is clear, it is clear. When it is not clear, it is not clear. That is how simple it is. When you just see it is not clear, don't start making your own things up. You end up losing money. Remember, the idea of trading is to make money. Okay, so they came aggressively down here and they pinned there with this hammer here, and this locked the swing low there. The swing low was locked there. Then they went and closed above the 13 EMA. Then they closed below the 13 EMA. Then what are you waiting for? You're waiting for them to close above the 13 EMA, and they did it there. Okay, they closed above the 13 EMA. So where is your stop going to be? Your stop, remember, this is the protective stop. Where is it going to be? Below 5 pips below the previous swing point. Okay, so that is my previous swing point there. So from there to there, it's about 30 pips. So it's going to be 35 pips stop loss there, 5 pips. Remember, this stop loss is just a protective stop. Doesn't mean the market has to hit it. I have other ways of managing my trade before it hits the stop loss. Okay, so you're going to target how many pips? You target 40 pips. Okay, and your 40 pips was made there on that big bullish candle. Okay, and this trade went up to 50 pips there. Okay, before reversing and going the other direction. Okay, so this is as simple as it is. All you are doing is you are anticipating the moves. You are waiting and applying everything, all the rules that I talked about when I was there, when I made that video, the maze trading strategy, the maze trading strategy. Okay, so you just incorporate the harmonic. Other people don't know how to use this indicator. They usually lose money using this indicator. It's because they use it wrongly. They think every time it has painted, you buy or sell the market. But if you use it in conjunction with price action, you'll be good and everything will be good for you. Okay, so this is where we're going to end our weekly market review. So looking forward to the next week. We'll see what it will present, and if it presents something to us, we'll take it. If it doesn't present anything to us, we'll not take anything. Okay, so thank you very much, and see you in the next video.